Inflation. Do you like inflation? I probably don't. But are we really being convinced that the solution, such as higher interest rates, is really going to save the day? That's the question I'm asking today. Is it really working, and is it worth us to listen to this kind of theory? Now, one of the big things that we've found recently is the Reserve Bank of Australia, or RBA, and just like other banks, reserve banks around the rest of the world with central bank policy, is following what's known as John Maynard Keynes. That's an English economist who had dreamt up theories about wages, prices, and interest rates. Now, John Maynard Keynes had thought up this theory in a series of books which he'd written about economic theory quite some time back. He was born in 1883, lived until 1946, and he'd authored a few books about economic theory from his standpoint. Now, we have to also understand a little bit about when this theory was written. Typically in the early industrial era, there was what was known as a highly industrialised or manual labour workforce, which was, in this particular case, highly unionised. So there was completely different forces, and we didn't have the 24-hour economy that we have today through the internet. We had a completely different type of economy. Now, even if you walk back to around about 50 years ago, in Australia, we did have what was known as wage price spiral type of economy, where wages went up, inflation went up, wages went up, inflation went up, prices and so forth. There was a connection between the two. But remember, back then we had something like about 40 to 50% of the workforce was actually unionised at that time. So thus, if you did have a wage situation, of course it would flow on to prices and so forth. But does that really apply today? You see, one of the issues that I have with this particular theory that the RBA is sticking to, with Keynes and John Maynard Keynes' economic theory, is that what they're saying is that, well, look, these people can't, deserve a wage increase because that's going to affect inflation. But I don't believe that's strictly the case these days. And what we seem to be getting here is they lift up interest rates. We've had something like over a dozen interest rate movements over the last year. And as a direct result of that, that's made rents a lot higher, and thus those people who are on the very lowest of the low wages are finding it very hard to pay rent, and particularly in an economy where finding accommodation is extremely scarce. We're down to less than 1% or even much, much lower for availability for rental stock. It's made it very, very difficult for people to maintain rental accommodation because of the high interest rates and the fact that landlords are charging a lot more. So what I find is particularly annoying also with the RBA's stance on this matter is they're now calling for unemployment to rise by another 140,000 people or more in order to achieve their goals of having a lower inflation target. But I have to ask the question, is the lower inflation target really worth it? And how are they calculating out this particular inflation scenario? And what evidence has the last 12 increases or more of interest rates ever achieved with changing the actual results of what inflation is? I ask the question, is the inflation that we've got, is it a one-off inflation which is kind of moving through the economy in a gradual big wave type of format, and it'll probably be over by about another year or two anyway? So all of this interest rate stuff is really a waste of time? Or do they have any hard evidence that by charging higher interest rates and making the banks follow suit, charge everybody else higher interest rates for their mortgages, and thus affecting the renters and goodness knows what else, is that really going to have an effect? Because after all, that is punishing the consumer. And is punishing the consumer a way to achieve getting inflation down? I don't see any evidence at the supermarket that that's the case. If that was the case, inflation certainly isn't changing there. Or maybe say the energy companies, the power companies, are they charging any less? No. I think that they've got their focus in the wrong direction. That's my particular thoughts on the matter. If they're going to actually achieve anything here, why not pick on the suppliers, not the consumers? I mean, the consumers are being punished here and their wages are not being compensated for it. And they're also being punished by the RBA merely for asking more money, which is ridiculous. I mean, the RBA has a lot of people there working at a much higher rate of income, usually six-figure incomes, and also the board members, I believe, based upon the evidence that I've seen, are certainly not income poor. They're certainly not representative of the community. They're only representative of a theoretical stance on John Maynard Keynes' philosophy, or shall I say theory of economics, which, by the way, I believe is entirely outdated, if not entirely skewed to a different era. So that's the way I look at it. What are we actually doing to the consumer out there, and is this going to make any difference in a couple of years' time? So here's what I actually propose they should look at doing. Now, probably this isn't the first time something like this has been looked at, and that is maybe they should actually have some kind of a way of dealing with suppliers, particularly key big suppliers, such as energy companies, supermarkets, other different cases like that, and say, is there a way that they can control those prices? This obviously hasn't been thought up before. It has been proposed in other countries in the 1930s, and believe it or not, even the Roman Empire once also tried to control prices as well, albeit their methods of actually saying if you don't do it, the consequences were pretty severe. But I do believe that punishing the consumer for inflation isn't the way to go about it. After all, what they're doing there is making what I would call policy-induced, a kind of a policy-induced poverty scenario, particularly for the very poorest of consumers out there, and forcing them to deal with a situation that they have absolutely no control over, and also to take the consequences of both sides of the transaction, what the RBA dishes out, and also what the suppliers deal out, because they have no control over it whatsoever. They have to spend money to survive. Now, if you have any thoughts on the matter, I'd love to hear about them in the comments below. And if you do have some thoughts about this even more, and how to actually grow that income in order to do so, mention that in the comments below and give a like if you like this video thus far. I'd love to hear your thoughts on the matter, because I believe this is a very important issue. My name is David Newton, and I'd love to hear more from what you're thinking. Please like and subscribe. Bye for now.